Hey everyone, Mike Katz here. I got a few interesting DMs about two things that I thought, you know what, let me go to my home office real quick, make a quick video. And then those two topics were, one was, how do you know when to exit winners and losers and how to manage a trade after you're in? And the other question was by someone that said, these Chinese names were running today and I didn't know when to get in. I felt like they had gone up so much. How do I find ways to join trend and get involved? So I'll make a quick video and then we'll upload it tomorrow to YouTube and see what you guys think. So the first question is, how do I know when to get in and when to get out? And that's something that is a question I get a lot from not just beginning traders, but traders of all levels. And it's a hard one. I think the most important part of trading is what we do after we enter the trade, how we manage the trade, not just the trade signal, not just what looks like a good setup. It all comes down to how much we lose when we're wrong and how much we make when we're right. So trade management is super important, in my opinion, and most people don't spend enough time on that topic. They just want to know how a chart's supposed to look when I'm supposed to enter, and that's it. But again, the most important part is trade management and making sure I have a positive expectancy. So what I did was I just dug through some trades here for a short period of time. It's one setup out of many that I trade, and it's one where I have, I think, what's here, like 123 trades ranging from -2 Rs to +17 Rs. And the thinking behind it is that I'm looking to join trend and try to make some money while the thing's moving up. So this kind of pertains to the other question I received: how do I join trend? Well, first of all, you got to know what's a trend, and the way I define the trend is by this move here. That's a high. I pull back, puts in a higher low. So higher low versus here, higher high versus here. That's all I really need to tell me that we're in an uptrend. Okay. People use all kinds of indicators. You know, it's great if it works for them. I try to keep it simple. As long as we have higher highs, higher lows, to me, that's an uptrend. And when we do have an uptrend, now I want to try to buy a dip to support. And an example of that would be here. So as we're going up, coming back down, going up, coming back down, we're making a higher high, higher low. This is the current resistance. And then once we break above it, it becomes support. So next time we come back and dip to that support, which was previously resistance, I buy. And I buy. Where do I put my stop? Right here below the previous pivot where I couldn't get below. And that is a simple way for me to try to join an uptrend, not chase at the top. I'm trying to buy a dip to support. And if it fails, fine. If it doesn't, then I have a chance to make some money. So, and then how I manage the trade afterwards, I just keep on trailing my stop as this high is broken, it gets through here. Then I can move my stop to here to break even, which is coincidentally where this low pivot is. And I have rules about when to take off half and when to add it back and how to trail my stop going forward. So I have rules before I even start. Now, the beauty of that is that I can basically now go back and measure this particular setup and try to see the history of how it performed. And if I can look at this in terms of R's, I can see that this is the histogram here of the distribution of all those R's, right? So I think about 40% of the time, this system either breaks even or loses, and then 60% of the time it makes money. And this is the distribution of how the R's look right here. Right? So You can see that break even happened about 22 times out of, what we say, 122 trades. And plus 1R occurred most frequently at 44 occurrences. And you can see that there. And that's the distribution of the R's. And the goal for me is to try to put myself in a position where I can jump on board a trend and try to make some big trades at the same time, not get killed and not lose too much. So most good traders, most good systems, in my opinion, are ones where 80% of the trades will either end up being a small loss, a break even, or a small gain. But 20% of the time, the winning trades, those big winning trades, is really what it comes down to. So looking at these trades here, we can see that there are some occurrences where there are multiple R's, right? 4R, 5R plus. And so I think the biggest one was 17R. So my job as a trader is to try to minimize my losses to 1R, okay? If I lose more than 1R, then I'm not executing correctly. I'm either, not respecting my exits, I'm putting on too much size and I'm getting slipped. Whatever reason, if I have 2R losses, 5R losses, 10R losses, then it's going to be very tough for me to recover and for the system to be profitable. So my job as a trader is to minimize my losses to 1R. And then I try to manage the trade where it kind of is compatible with what I'm comfortable with. And what do I mean by that? I could probably design a system that says, you know what, I'm going to maximize the most amount of money that could be made once stocks like these are in an uptrend. I want to make the most possible, meaning when I come in, I buy here at 41 on this dip, right? I want to design a system that captures the whole move and gets me out here, okay? Now, not realistic, but let's say it was realistic. Let's say that's something that we can do. But that's going to come at a cost. And usually that's the cost of a win rate. And I might have to design a system that's only right, let's say 10% of the time, and it loses money 90% of the time. And that will make the most amount of money after, let's say, 122 trades. But at the same time, it's going to be very difficult to trade. Having 90% of my trades as losses could be very difficult, and I won't be able to really execute it. And then I'll be trading very nervous. Then that's not really compatible. It's not really advisable. So while I'm trying to make the most I can, I'm also keeping in mind what I can execute and what's realistic. So I think this system is about 40% losses, 60% wins, and it averages about 1R when you take into all the winners and all the losses. Its expectancy is positive 1R, and that includes the negative trades and those huge winners and all those. Everything averages out to, on average, making about 1R. So when I know my rules before I even put the trade on, I can kind of now also expect the next trade to look a certain way. I know that most likely it's going to be either a small loss, a small win, or a small gain. Very unlikely for it to be a massive win. But if I follow my rules, sometimes I'll end up with those massive wins. So knowing that, now kind of the next time I put on a trade in the setup, I will be less stressed, and I won't be out there trying to look for that 17R trade every time. And I'm just trying to execute my plan. So this goes back to the question of, how do I know when to get out? How do I know when to get in? And do I take 1R? Sometimes I let it run and it doesn't go and it comes back. Sometimes I take it and it ends up being a huge winner, which I missed out on. Very frustrating. And the way to fix that is to have rules beforehand, track the setup, know its results, and then see what I want to tweak. Okay. And quickly, let's contrast that with someone who decides they're going to take up trading. They're going to sit down. They're going to look at charts, and they're going to go, and no rules in place, no money management, no risk management. They're just going to wing it because they're, the next best thing. They're a superstar trader, right? Well, think of the emotions that they're going to go through as they're trading. And after one trade, after 10 trades, they're going to be a mess, right? Sometimes they took winners too early. Sometimes they didn't take winners at all. They blew through their risk. And before you know it, this trader's done, and they're emotionally a wreck, and they don't stand a chance of making money. But someone who has rules in place, has a good understanding of how their system is going to perform over time, and knows what they can kind of expect over the next trade, over the next few trades, is going to be more relaxed and is going to just try to implement the system. And I think as a trader, that's the best place I can be in mentally, and that's probably where my peak performance will come in. So hopefully that was helpful. A book that I can recommend on this topic is one I read years ago. Probably a good time for me to go back and reread it. It's Van Tharp's book on systems. It's called Trade Your Way to Financial Freedom. Once again, Trade Your Way to Financial Freedom. He has another book, I think, Super Trader. All his books are along the same lines, being very system oriented, very process oriented, and knowing your R's and knowing your stats. It builds confidence in my setups, and it keeps the emotions out to a certain degree. Obviously, it's tough. Nothing's easy. I get emotional just like everybody else, and I just try to be efficient, and I won't be 100% efficient in my system following my rules, but I try to be as close as I can. And that's all we can ask of ourselves. So hopefully this was helpful. Mike Katz here with 7 Points Capital, answering a couple of questions on Twitter. If you have questions, feel free to shoot me DMs on Twitter. I'm more than happy to help if I can. And we'll get this uploaded tomorrow, and we'll tweet it out. Thanks, guys.